Or I want to pause. Good afternoon, everyone. Welcome to this project webinar. It's 4 a.m. in the afternoon, so it's good people are either 4 a.m., 4 p.m., 4 p.m. In the afternoon. I was talking to John Corey earlier, so I think my international time zone's off slightly, but 4 p.m. in the afternoon, and people are either having their tea break or have got home early or able to create a bit of time to be on this special project webinar. So if you want to share your screen, Ajay, we can.
Yep, absolutely. Here we go. I hope you all can see my screen.
Actually, yeah, perfect, 100%. So we are here today to talk about a new project from Becontree Avenue, Tranche 2 from PLMD. So I'll say that AJ, say a quick hello. Now he's hosting it now. How are you?
Very good, David. Thank you for hosting this for us.
No problem at all. And our investor portfolio manager, Dalray, how are you?
Yeah, very well. Hello, everyone.
Good. Thank you. So yeah, let's do it into it. So next slide, please. So for those of you that don't know me, my name is David Johnson. I'm the CEO of Leo Crowdfunding. We're an equity property crowdfunding platform, and we are hosting this webinar on behalf of a fundraiser, property developer, PLMD Group, as you can see there, and we'll explain a bit more as to sort of why we host it this way. But for now, that's me. I'll let maybe AJ introduce himself if you want to give a quick bit of your background sort of before PLMD, people get a bit of an idea of your business CV.
Yep, absolutely. Thank you for that, David. And this is me, believe you guys, that this is my picture. I know I've grown a bit of a beard after that, but yeah, this is me, Ajay Kapur. I'm the CEO of PLMD Group. We build properties, we rent them out, we look after the whole property life cycle in that sense. Previously, I worked in banking, so I worked in asset management in various organizations, Morgan Stanley, UBS, JP Morgan, etc. But heart and heart, I'm a property developer, and this is what we do for a living.
Brilliant, thank you. Next one then. So just by way of setting the scene, the reason that Leo Crowdfunding is on this investment pitch, this project webinar on behalf of PLMD, is that we are a crowdfunding platform. And we operate under the sort of compliance and regulation that the Financial Conduct Authority requires in the UK. And if you go down the bottom there, you'll see reference to a risk warning. And we do encourage all potential investors to have a look at the risk warning, familiarize yourself with its contents. But the bottom bit's important, that Leo Crowdfunding Limited is an appointed representative of Sharon Limited. And you can see their FRN number there. And Sharon is authorized and regulated by the Financial Conduct Authority. Pitches for investment are not offered to the public, and investment can only be made by registered investors on the basis of information provided by Leo Crowdfunding. So what you're going to see now in this slide deck has actually been approved as a financial promotion. So that's important to understand the context, and that's why we are hosting this, and it gives the investors the comfort that what's been talked about has at least been reviewed and approved as financial promotion. But ultimately, every investor looks at the information and you make your own decision if this is an investment for you or not. So we're going to hand over to AJ, let him run through this information. Dal is there to take any questions. So if you have any questions, please put them into the Q&A. Don't put it in the chat box, put it in the Q&A. That allows Dal to sort of take ownership of the questions and ask them at the appropriate time. If we do run out of time and there's more questions than we have time for, don't worry. AJ will happily put some written answers together, and we'll send them to everyone who has been on as an attendee at the webinar. So brilliant to see so many on here on a 4 o'clock in the afternoon. And we're certainly excited by this project within Leo Crowdfunding being Tranche 2. And I'll not steal AJ's thunder with the exciting news of Tranche 1. So with that, AJ, I'll pass over to you.
Perfect. Thank you, David, and thank you for reading out the risk warnings. It's always a task to do that, but thank you. You've done a fantastic job. Hello, everybody. I have a lot of energy for this one, so I do want you guys to listen out to this. I have a lot of information to share. So let me start on the journey. So first of all, I'll go with the fundraiser, then I'll tell about the project, the deal overview, and the income investment, the location of the project, the financial summary, and the equity offer document. So let's get into this. This is us, PLMD Group. We have 70 plus assets built to rent in and around London. They're all income producing in the sense that rental income comes from these assets every month. We've been doing this for more than 10 years. There's 20 million asset under management, which is what forms the 70 plus assets which are built to rent. There is an experienced management team in place, and we firmly buy into the eco-friendly building practices. I'll tell you how we do this and what we do. We acquire properties and we are project managers. So we acquire properties and we manage the projects. We're also the developers and the construction company. So we have our own construction company. On top of that, we have an estate management arm which manages the rentals from tenants. And then we have a capital arm which raises capital, which is what we are here for. So if you look at it, this is the complete life cycle of property management. Why I'm so proud of this, why I'm spending more time on this, is because I want to make a point here that we control the whole of it, which means we are responsible for all of this, which means we know we will do a good job because we are part of it. We're putting our name on it. It's not like we're relying on A, B, C, X, Y, Z to deliver a service. It's not like we will do this and then returns will come. This cycle is working, returns are coming as we speak every month. And this is what we want to share with the incoming investors. This is a project that we've done. So you can see, this is what we bought in 2019. This was a nightclub kind of place, a warehouse in Dagenham, in Becontree Avenue. This is what we converted this into. A beautiful development of 9 flats, a shop at the bottom, and roof gardens, as you can see. I have actually seen people using winter barbecues here. So if any of the investors are interested, they're welcome to come and join us for that. So this one has got 4 one-bedroom flats, 5 two-bedroom flats. There's a ground floor commercial unit. There's allocated parking. They're all rented out, and honestly, we had a very good time renting them out. These are beautiful apartments. There's nothing like this in the area close by. It's close to a lot of schools, close to Chadwell Heath train station, which has recently got the benefit of Elizabeth Line. So they're in huge demand. What we're doing now is we're taking the rental returns from this and offering a 12% return to our incoming shareholders. So let me show you how we do that. I do want to point out one thing while we're at this. You see this black blob here? This black blob is the solar panels, which illuminate all the communal areas, as you can see in the building. And on the ground floor, there's parking lots. All of them get illuminated from the solar panels. So there's a bit of history, and that's why it's called Tranche 2, because we already had a Tranche 1. And I'm proud to say that in Tranche 1, we have already declared dividends per quarter. So we have been declaring dividends at a rate of 12% per annum. That's what we've achieved with Tranche 1. So there's a bit of a track record, and I wanted to make sure that this comes out. We're supposed to be delivering 3%, but as you all know, rental returns are improving in the market. There is like 10, 12% rental returns on top, and we are happy to share that with our investors. And I hope to share the same with our incoming investors. So this is the investment return from Tranche 1, which we have paid. So this is what has been delivered. And now we are coming out with Tranche 2 because I think there is scope for that. And we still have a lot of rental income that's coming in, which we can share and raise funds. In Tranche 1, we raised 162K. Now we're trying to raise 180K. Let me move forward with this. So you can see this is the development. These are the flats within the development. These are obviously pretty pictures. What we're trying to raise is 180K. There's a projected ROI, return on investment of 24% over 24 months. I will stress again on this point. We're not trying to build something to get a return to deliver to our investors. This is already there. You can touch it, see it, feel it. If you need to do a site visit, feel free to contact Dal. I'm sure he'll be more than happy to arrange a site visit. You can see the property that you're putting money into, and the returns are being shared from the rental roll. So this is an income generating property, and we are giving quarterly dividend payments. This is a passive income investment, obviously. And why would you invest in this? I looked into this very briefly. I spoke to my own family members and I asked them, hey, what kind of investment would you want to see? And they said, we don't want any construction risk. We do not want you to come back to us and say, oh, we don't know what happened. Something happened, something went right, something went wrong. So we work very hard as an organization to see how we can de-risk the investment, which means there's no construction risk in this, which means there's no day-to-day management to be done with this. There is a team of people who've been doing this for more than 10 years. So you leverage the expertise and network of that team. Buy-to-let is a segment which is growing rapidly. And I just want to give this information that there was a time we could all keep our money in the bank and feel good about it. Right now, due to inflation, that money is losing its value by 10% every year. This return would make sure that you at least get a bit more than what you're losing. This makes sense in the current market. I'll spend some time in the location. I'm sure you all know Barking and Dagenham. The good thing about this one is it's very close to Chadwell Heath Station, Becontree Underground Station, and Dagenham Heathway District Line Station. Now, this is CBRE, one of the best property firms. They've been talking about Barking and Dagenham as a growth area. You can see year on year, this was at number 5, this is grown to number 1, and this is only on the rental side, because the rental returns in this area is much better than anywhere else in the whole of London. This is on the top of the list for London Hot 100, which is great to see. Obviously, we make this investment long time back, but we always knew there's more growth that is achievable in this area than anywhere else. You can see that borough for renters. So just to summarize, 180K return, 24 months, 24% return. Total return is 43K. We are returning 223K over a period of time. The best thing about this is the money starts flowing back to investors on a quarterly basis. So this is not one of those investments where you have to wait until 2 years, 1 year, or anything like that. Every quarter, the return goes back to the investors, and you've seen we have paid back to tranche 1 investors. Amazingly, the price per share is £100, which is very good price, I would say. So I would encourage people to look into this. Obviously, decide on your own if this makes sense. This is a bit more mathematics around it, but it's very interesting. I haven't done this graph, but somebody in my team has done this, and it's a beautiful graph, which shows how well this is. Thank you, Lena. I know you're here. I just wanted to thank you for doing this wonderful graph for all of us. So this is the buy-to-let mortgage that we have on this. Then we have crowd B investors, which is what we have already raised. This is what we are raising right now. And this is what we still have in the deal. This is beautiful because the point we're trying to make here is that we as a group have got £500,000 in this before we raise this money from incoming investors. What this means is we will be losing all of this before an investor will lose £1. I'll just repeat this one more time. I'm trying to say that, look, this is how this investment has been re-risked. So we as a company has got £500,000 into this. We'll be losing all of this. Let's say the market goes really bad, property prices start going down. We'll be losing all of this before our incoming investors will lose £1. And that's the strength of this product. Income generating, quarterly dividend payments, a lot of equity behind. I mean, if you look at it, we've worked very hard as a team to deliver a product with very little risk. The property is insured by Aviva Insurance Company, which is one of the top, in fact, the topmost insurance company that you can have. Most of the apartments have got rental insurance as well. I would say in the last 2.5 years that we launched this development, every single rent has been paid. Sometimes late, but every single rent has been paid. We personally vet the tenants before they come into the development. We know these tenants by their first names. We know what's happening in their lives. That gives us a lot of control over the incoming returns.
AJ, can I just jump in there quickly? Yeah, I think you're right. I think this is a very, very important slide and really well laid out just for investors to understand. I mean, if you backtrack in time, there would have been buy-to-let mortgages. If you just pop back up there again, if you can't, yeah, there's buy-to-let mortgages at 1.7. Before the crowdfunding raises, the yellow bit would have been the rest. That was your equity in the deal. However, start of the year, you allowed some investors in to share the rental in the blue. You're now allowing some more in to share the rental. And that's creating, like, releasing some equity for you, which makes sense from a business perspective. But from the investor point of view, you know, as you say, that yellow block is really what's above them in the capital stack. So it's a nice place to be in the blue and the white, in terms of the overall capital structure of the deal. And I think it's an interesting model, but one that makes so much sense for the reasons you've been discussing.
Yep, absolutely. And thank you for explaining that well, David. Okay, so I'll move forward to the exit strategy. So if we had to exit from this, we would be raising mortgage on this property or one of the other developments. So we have 70+ assets with a 20 million asset under management. So we can raise assets from this development or other developments from the group, and also profit from operations to exit out of this structure. This is a showcase of some of our other projects apart from Dagenham. So you can see this is there's some projects which we're really proud of. In fact, I'm proud of all of them, but this one is a beautiful development of 19 flats. This one is a development of 7 flats. This one is a development of 9 flats and a house. This one is a development of 5 flats. So we do this for a living. We're proud of this. We manage them very well in-house within our team, the whole process: buying, project management, construction, development, estate management. And this is the team that helps me, Ajay, Lena, and Jastik. You can see the team here. There is a bigger organization chart, and this is an equity offer document that's available on Leo's website. I think this is the point where, Dal, I hand over to you.
Yeah, absolutely. So those of you who don't know me, I think hopefully by now, anyone on this, the actual webinar, from what I can see, I've actually spoken to. So fairly straightforward process. Simply go onto the platform. If you haven't registered already, you can click on the link which will be provided in the chat, or directly go into leocrowdfunding.com website. Register, so a short KYC, name, address. There's a short investor ready questionnaire. It's a 5 questions, multiple choice. Wouldn't take you more than 3 to 5 minutes. I would recommend reading the risk warnings prior to doing the actual test. It just kind of prepares you for that, so that you understand the level of risk involved with crowdfunding. Once you've done that, you simply upload a proof document, such as a photo ID of a passport or a driver's license, and within a 5-minute period, you'll then should get an automated email stating that you are then investor ready. And of course, if there are any issues with registration, you can always liaise with me directly, either call me, or you can also email me, and my details should be at the end there. Sorry, just to highlight as well, that's the actual registration. So once you've registered, David, if you can scroll down slightly, this little box on the right-hand side where it says register to download the document, that document would be available to download in PDF format which is the equity offer document, and that's the most important document of all. That's the high-level details of the project. You get to see the bio of PLMD Group, how they started, what they're all about, the project itself, the location, why that strategy, the financials, and again, just recap on the exits as well, and it will give you a breakdown of the term as well, what's available. So that would be the kind of the most important document. You also have 4 separate tabs there. Should you wish to kind of just go into finances, financials, the team, and then you have a forum there. So if you have any additional questions, please do make a comment on those, and the team will get back to you directly on that. David, do you want to add anything to that?
Yeah, if, I think some of the important things are that there's the opportunity to actually record interest. So when the screens there were shared and you're on the pitch pages, if this is an investment that you think, you know what, I'm liking this, I want to, if you like, secure my place to make sure I'm going to get the information from it. On the screen there now, you can see you can leave an email address. And then just below that, there is an amount that you may be interested in investing. This is just a pledge. This is not an investment. But if you leave that, then it kind of registers your interest. And then Dal knows to get in touch with you about the project as it goes forward. The plan at the minute is to go live for investment at 12 noon this Thursday. We're actually doing a live event in just behind where Ajay's sitting now. Where Dal was earlier most of the day in the PLMD offices in Stratford. There's actually, Ajay, a shareholder meeting for the Tranche 1 shareholders. You've invited them to your offices, putting on a bit of refreshments for them just as a bit of a thank you. That they've all received 2 dividends now above the projected ROI. And you've put this on, I think, just to give a bit of thanks to them. Is that right?
Yep, absolutely. And everybody who's there, guys, first of all, thank you for joining today, and you're welcome to join us tomorrow for the investor event. Even if you don't invest, it's good to come and meet the team, meet the people who are behind an investment like this, where I think everybody has worked very hard to deliver investment like this in this environment, which is giving a 12% return, and we have worked hard to de-risk it as much as we can. So I would look forward to meeting most of you tomorrow when we have an event here, and I'm sure Dal, you will send the invites to everybody. Yeah. But yeah, I would take this opportunity to thank David, Dal, and everybody else who's here to join us today for this. Thank you.
So we'll just leave it, Dal, if there are any questions. If anyone wants to ask any questions now, we've done a nice sort of bullet point sort of process there. We do have a few minutes where we can take questions. Put it in the Q&A. And Dal can ask from there, or Dal, there may be questions that investors have asked you already that you've been, obviously, as you've been engaging with them, so feel free to put those to Ajay.
Absolutely. So one direct question that came to me was around the commercial unit, and I think this was quite a valid kind of answer. I believe the commercial unit is an estate agent still, is that right?
Yes, it is. It's on a long lease with an estate agent, yeah. Yeah,
so that's just to note, just in regards to, and I believe that they've been really pushing at you to kind of get the management side done, so you can see the demand in the area. So that's also good to see. So a couple of questions have come in. How long did it take back in December 2020 when the flats were first put on the market to rent out all 9 flats and commercial unit?
I would say within 4 weeks they were all rented out.
4 weeks?
Yeah, 4 weeks, and this is with us doing all the credit checks. And we use an external credit reference agency as well, the time they take to come back with credit checks. So they were very well received in the first time. And I must admit, most of the tenants have stayed, but I think 2 tenants have moved out, and we were able to replace that within like a day. Once they moved out, day or 2 days, we were able to replace, and one of the tenants actually moved out at 12 o'clock, and the other tenant moved in at 2 o'clock. That was, I haven't seen that before. So this is how strong the rental market is.
And just to note on that, obviously I was at the office today and I can hear the guys just around certain tenants now on a waiting list, you know, really actively looking to get into that block because the demand is, of course, so high. So, I mean, that's also good problem to have, essentially. Thank you for that, Ajay. Is the reason for the raising of funds to release equity for the next project? And there's another 2 add-on questions there. Are finance costs fixed for 24 months? How will funds be raised to redeem the equity at the end of the 24 months?
Yes, absolutely. Matthew, thank you. All good questions. The reason for raising equity is it's good to raise equity and keep it there for future projects or for operational improvements. So we are making a lot of improvements to our operations, and this is why it's always good to have fuel in the business so we can grow it. Finance costs, yes, definitely. And thank you for raising that question, because I forgot to mention the mortgages is fixed rate for the next 3 years. It's 2 years gone, it's fixed year 5. So there's another, so yeah, there's no interest rate risk, and if that's what you're coming to. So thank you for asking, because I forgot to mention that. Funds will be redeemed by raising mortgage on the existing property or one of the other properties in the portfolio. So that's the answer towards how we would pay it back at the end of 24 months.
Thank you. Thanks, Ajay. So have any of the original tenants, residential, commercial, left? If so, how long did it take to rent the place again? How many inquiries did you get?
Anton, thank you for asking these wonderful questions. I think I have tried to answer them. So 2 tenants have left. One of them was rented within 2 days. The other one was rented within 2 hours, which even baffled me, I must admit.
Great, thank you. How long is the commercial lease for? Any break clause?
So the commercial lease is for 15 years and there are no break clauses, but there are rent reviews in place.
Great. Are there any other variable costs that could impact return over the 24-month period?
So that's a good question. So we have tried to fix the interest rate. We have also, and these are very good questions, Matthew, because sometimes these questions bring out the best on how well this has been planned. So interest rates are fixed. The cost of insurance, which was going up because it's going up all around, everything is going up. So we have fixed the cost of insurance as well for the next 3 years with Aviva, because we could clearly see there'll be this thing that insurance companies would want to increase the cost. So we have fixed the cost for next 3 years, and they have got a clause in the Aviva insurance which says they can only raise the insurance by up to 3%. That doesn't mean they will raise it, but that means they cannot raise beyond 3% for the next 3 years, which is pretty good in this market. Yeah, variable cost. I think maintenance is always a variable cost. Having said that, we build these flats, and I tell my construction teams always that whatever you build is what we'll have to live with. So do not build problems. They have been built well, they stay well. Having said that, yeah, there could be an odd maintenance issue, which we manage ourselves. So there's nobody else earning money out of this.
Great, thank you. What is the LTV on the mortgages?
I'll have to check the numbers, but I think around 60–65%.
What have the actual maintenance costs been like since the project completed in December 2020 compared to the 5% projected maintenance costs?
Yep, good question, Antoine. Again, maintenance cost has been very low because they're newly built. I mean, you don't expect problems for the first 10 years if they've been built well. That's what I would say. So pretty much very minimal maintenance cost. We have to keep 5% because it would not be appropriate to put less than 5%. Ideally, most of the flats have had no problems. I think there was one boiler issue and we had to go and replace the fuse. That's all I can remember from maintenance.
Excellent. Thank you, Ajay. Just to double check, B and C shareholders rank equally in terms of seniority rights?
So B has a priority and C has also a priority over our returns. So we will not take any returns until the B and C returns have been delivered.
Yeah, if I just maybe add to that, B does outrank C. Obviously, B were in the project first, so they get their their 12%, or we get their pro rata 12%, and then the C shareholders. But as AJ said, they both are paid to the projected ROI before the fundraiser receives any income from the rent.
Excellent. Final question from me. Is there a provision in the JV agreement preventing PLMD from taking on mezz finance secured against the property by the way of, for instance, a second charge, as the LTV on the senior loan seems to be rather healthy and is subsequently added cost of finance would significantly reduce or wipe out the entity, the expected profit to be to shareholders?
Antoine, good question. I'll answer it anyway. So I don't think we'll have any mezzanine finance after the equity raise. That's not possible. No mezzanine company would do it, and we would not do it because we would like to keep the structure as it is. So we have our own risk ratios within which we like to operate each one of the companies in each one of the developments. So we will not be raising any mezzanine finance after this raise.
Good. Okay. Thank you. Thanks, Dal, for handling those. It's good to get good questions in. I think it's always good, AJ, when people are asking probing questions and questions that force you to explain the model and explain how you've mitigated the risk. I think that's always very, very useful and makes for a really good recording. So, so thanks everyone for joining today. Do you want any last sentences, AJ, before I wrap up?
I just wanted to thank you, all of you, for joining us on a working day at 4 o'clock. Thank you.
No problem at all. And this is recorded, as you know, so the recording, Dal will send out the recording to everyone who has attended today, so you can go back over it again and have a listen. If there's something that AJ said you weren't just sure, you can then go back over the recording and listen again. So AJ, thank you for running through that professionally and briefly. I think it was really good just to go through everything in detail, but you know, not obviously deep diving into a level that's difficult on a webinar sometimes. I think that was really well covered, and of course we're here for any further questions. If anyone has them, put them in the forums, get the equity offer document. It'll answer most of the questions, but if there is any additional questions, by all means reach out to Dal. And do you want to just put up that slide, Dal, of your contact details, just in case anyone doesn't have it to finish off? Just for the last 15-20 seconds. If anyone does have a question about onboarding, about the project, anything about the offer raise, then there's Dal's details. So just contact Dal at leocrowdfunding.com, Dal at leocrowdfunding.com, and he'll get straight back to you and hopefully answer your questions. So we go live at 12 o'clock on Thursday is the plan. So if after today you're thinking, yep, I'm liking this, I want to make sure I'm kept informed, then please register your interest, leave your email address, leave an amount that you may be interested in investing, and Dal can make sure you're kept in touch with the project going live. So with that, I will thank everyone for coming. Thanks, Dal, again. Thanks, AJ. And we'll talk to everyone again soon.
Thank you.
Thanks much, everyone. Bye-bye.
Bye-bye.